Good evening and welcome to my midweek recap for the S&P 500 and plan ahead for the rest of the week and into next week. I am still in these 9 November 280s. Average is now 405 from a couple of ads, one below the 200 SMA. Added yesterday again on the break above this little base that has set up. And I'm also holding those December 313s and June 325s. Right now, price action is down a little bit after hours on futures, right around the VWAP area, so nothing really to be overly concerned about at the moment. And what I'll be looking for tomorrow, excuse me, is a break above this 281 level. I wanted to sell some of those calls out here at $5, but I think they only hit 494 on highs, so probably a lot of supply up there at $5. So we'll see what happens. Just a digestion of yesterday's move, dip down to retest the previous breakout level, the technical buy area, however you want to refer to it as. Very typical of price action when this kind of pattern does set up. If this trend line breaks, I'll most likely get a retest of these lows, maybe even a slight dip, and then a little flush of the stops, and then pull right back up through there and pop all the way back up to wherever. So if I'm stopped out of these, I will take another stab at them. I'm still in the money at the moment. I don't want to I do not want to let it roll back against me too far. So I will manage these as tight as possible over the next couple of days. Target I'm looking at tomorrow. I will sell some at $5. Next target is going to be this 284 and a quarter, 284 area, which will put them even deeper in the money. I'll take some off there and trail the remainder up to the 50 SMA if that does occur. The daily candlestick over here looks like it could potentially be a momentum hammer or a potential doji cross. Both of them have almost exactly opposite implications. So first of all, if it is a momentum hammer, that just means there's momentum going up, and we'll most likely have another test of the next higher resistance area, have this breakdown trend that was the initial breakdown that led to the huge flush, and the 21 EMA right around those two areas is probably going to be a lot of supply up there. Could be a doji cross, which is a topping type of candle, and in order for that to confirm, we'll break below this 277.5 level. Right now it's much closer to highs than lows, so in my opinion, it's probably going to be easier to break the highs. We'll see what happens tomorrow. Still elevated volume here for the last couple of days in relation to the sell-off, and some traders may be saying volume doesn't confirm participation on the move higher. Okay, I'm just going to zoom back here to February. Couple of instances where huge volume on sell-off. Even this one was a dead cat bounce, huge volume, huge volume. Volume is only there until direction is reestablished. Once direction is established, you can see lower volume, lower volume, lower volume, and then finally a spike. Okay, low volume all the way over to here until it sells off. It sells off into support, where guess what? More volume comes in. So volume spikes on the moves down, lower volume on the moves higher. Seems to be the norm. Next one over, of course, volume on the way down, and as it goes up, volume starts to drop. Sure, it does pull back, but it never has put in a lower low. So volume coming in at lows, at the 200 SMA, at support. I'm going to continue to trade it from the bullish side. Anyways, here onto the futures. We're down a couple of points here after hours here at 2804. This chart loads. I'll be able to go over what I'm looking at. I'm aware of the daily pattern here has put in a potential bear flag right at the the 200 SMA. So if this does break, if I get a break of this lower trend line and I'm stopped out of my calls, as I said before, I will look for another support play lower, closer to in the money, maybe, or at the money calls. No big deal. Sure, I might take a loss, might give up some of the gains that I've already have right there on paper. But such as trading, sometimes I'm wrong, sometimes I'm right. The goal is to be right more than wrong. So aware of this bear flag, not trading as such is, in my opinion, in an uptrend, which the S&P 500 has perpetually been in an uptrend. Bearish patterns are most likely bear traps, and I'll continue to trade it that way. There's going to be bear stops above, bull stops below. So we'll see what happens tomorrow and going into next week. If If you have any questions or comments, please feel free to leave them down below. Have a good evening and good luck.